Welcome, everyone. Thank you for taking the time to join us here today. For those that are joining us for the first time, my name is Carlos Hernandez. I am one of the client service representatives here at the Retirement Group. And for today's agenda, we're going to be talking to Kaiser Permanente employees about interest rates. But before we get started on that, there's a few things that I want to mention. The Retirement Group is not a part of Kaiser Permanente. We are an independent retirement advising and planning firm. But unlike most financial planning firms out there, we specifically work with KP employees. What that means is when we help our clients or prospective clients prepare for their retirement, we're going to be well versed in how their plans actually work, such as their pension, their 401k, their TSA, even their Plan B accounts, and as well as their retiree medical benefits, such as the Kaiser Senior Advantage Medical Plan. All things that we think we need to know in order to give you prudent advice and help you build a comprehensive retirement plan, which is something that we actually provide at a no cost and no charge basis. So I would urge you guys to take advantage of that. At the end of the presentation, I'll go over on how you can book some time to take advantage of that complimentary analysis, which is very important to have. It's an analysis that will go over, when would be the best time to retire, or if you're in a situation where you're choosing between two different payment options, it'll go over which option is best suited for you and your situation. So with that being said, let's jump on today's presentation. And as I mentioned, today we're going to be talking about interest rates, and specifically the segment rates that are used in the pension calculation. So these segment rates just came out, or February segment rates just came out this week, in which we saw a slight increase of about 20 basis points compared to January's segment rates. These segment rates are essentially the corporate composite bond rates. And you'll notice that they are three different segment rates: the first segment, second segment, and third segment. Each one pertains to a different period in retirement. So the first segment is going to be that short-term bond rate, which covers the first 5 years of your retirement. The second segment would be that intermediate bond term, which covers the following 15 years, so years 5 through 20. And then the third segment would be the long-term bond rate, which would essentially cover 20 plus years into your retirement. What they're going to use is a blended combination of these three segment rates, but each segment will have a different weight depending on your age when you start commencing your pension benefits. And how they work in regards to your pension calculation is that they have an inverse relationship with specifically the lump sum payment option. These segment rates do not have a direct effect on the annuity option. It's going to be simply or only for the lump sum payment option. If you're looking to go through with the annuity option, that one will not be affected by interest rates, and you'll see that, with the calculations, that does not get affected. That does not go down. It continues to go up as you work longer and longer at Kaiser Permanente. In regards to the lump sum payment, that one is currently being affected by these interest rates. And Kaiser specifically uses a 2-month look back for their pension calculations. And how it works is they have an inverse relationship with each other. So when these segment rates go up, the pension lump sum value goes down. As you'll see on the screen, this little teeter-totter we have up here, interest rates are going up, lump sum is going down, and vice versa. So if you notice on the middle part of that graph are the segment rates as of the past couple months. And you'll notice that there has been a kind of movement forward or going up. So these interest rates have been going up as of last year, in which that ultimately affects your pension lump sum payout. And if you're looking to retire in April 1st, starting your pension commencement on April 1st, the interest rates that would be used for your pension calculation would be February's rates. So it would be a 2-month look back, which those are the ones you see on the screen. Is 4.99, 5.12, and 4.96. With the recent turn of events, with the bank situations going on, we could only assume that there might be a slowdown in these interest rates in the near future. But as of now, we keep seeing them continuing to go up, which ultimately means that is negatively affecting the pension lump sum payment. And if you're not aware of any of these rules or correlations with your pension and how it's calculated, I would suggest you connect with a retirement specialist to make sure you're making the right choices, and as well as optimizing your pension benefits, as that is going to be a huge part of your overall retirement plans and assets that you have saved up, in which we'd be more than happy to connect with you here at the Retirement Group so you get a firm understanding on how these interest rates work and how they directly affect your retirement plans. Even if you have a financial advisor, get a second opinion. But we encourage, our clients, we encourage them to get a second opinion to make sure they're getting the most accurate and up-to-date knowledge with their advisors. And if you don't have a financial advisor, I would suggest you connect with us on a complimentary call and analysis basis. As I mentioned before, we do provide a complimentary analysis that can go over on how these interest rates will play out in your retirement plans. As you see here, 74% of Americans over the age of 50 do not have a written plan. We just think that is unbelievable and honestly shouldn't even be allowed. Please connect with a specialist to make sure you're optimizing your pension payout that you worked so hard to get, and as well as making the right choices for you and your family situation, as they will be a huge part of your overall pension planning process. If you would like for us to connect with you on a complimentary basis, even if it's a quick 15-minute phone call, you can set up some time by emailing us, calling us, or even scanning these QR codes here. Again, my name is Carlos Hernandez. I look forward to connecting with you to make sure you're making the right choices and optimizing all of your benefits given to you at Kaiser Permanente. And again, before we finish things off, I do want to disclose again that we are not a part of Kaiser Permanente. We are an individual or independent financial advising firm. We have been working with Kaiser Permanente employees for a vast numerous of years, but we are not endorsed, sponsored, or affiliated by the company Kaiser Permanente. Thank you everybody for tuning in, and I look forward to seeing you guys in our next session.